Alright guys, so this video is gonna be about my entry types. My entry types. Um I think I have about four of them, but I'm gonna draw them all out so you can see it. Where they go. This is one. I'm gonna draw everything all out. Okay, so first of all, let me explain these two first of all, okay? The first thing that I'll do is look for liquidity. Now, if I go on the higher time frame, I'm not looking for a bunch of trend lines like this and expect price to do something in lower time frame and take everything all out because I'm a lower time frame trader. I'm an intraday trader. No, I don't do that. What I do is I go to my higher time frame, look for some certain kind of inducement. Example, let's go to say 1 hour or 4 hour, whichever one. I'm going to use today as an example. All right, I'll get rid of all of this first. Okay, so this is my 4 hour, right? Yeah, 1 hour, sorry. What's the first thing I do here? The first thing is what? I try to understand what the day does immediately after Asia session. This is Asia session, and then I had this, phew, coming back to the downside. So then I have to identify something of value, firstly, like an inducement that's taking out liquidity, and that is where this line came in. Okay, could be here, it could be here, but the major thing is it needs to seek to take out liquidity. It needs to take out liquidity. Now, the next thing I want to do after it's taking out liquidity is to look for confirmation. Now, I don't look for confirmation most of the time, and the reason I don't look for confirmation is going to be explained in another kind of way that I would pick my entries. But after this, I go into 5 minutes, then I start to plot the graph. Okay, so what areas could price want to magnetize towards? For a reversal, this line. I'm glad it happened a day before because now I can say, okay, did it give me an equal highs? Could it be something I target? Why should I want to target this area? My next point to target is going to be this Asian high. Why? Because of course, firstly, it's an Asian high, and most Asian highs are liquidity, and also it's build up liquidity right here. But I need to take out this guy first. Now, if I need to take out this guy first, I need to have a reason for price to want to take it out first. All right, we've had an inducement, like I said. After an inducement, the next thing is to what? Identify why price should go higher. And I see this liquidity here. So I'm cool. I'm like, yeah, no problem. Price should take out this guy. But instead of me having the normal breakout structure mitigation, which is of course my first entry, my first way that I trade breakout structure, the normal high city stuff. Instead of me having this, what I had wasn't that. What I had was this second one. Sorry, gonna have to allow my mouse today, so this might be a little bit slower for me. Okay, so what I had instead was this setup right here. Naturally, what I'd say and what I'll do is, okay, this guy came to mitigate this guy. The mitigation happened there. Cool. The next one also, say it came to mitigate here. But this guy right here didn't mitigate anything. It didn't come into this box to mitigate. So instead of me waiting for a mitigation of this demand level, all I have to do is what? Okay, look for this potential sweep of this guy. Once I have the sweep, I'm ready to go higher. Once I just have the sweep, I'm ready to go higher. Now, I'm not just ready to go higher because I have the sweep. I'm ready to go higher because why? I have liquidity build up also on the lower time frame like this, that price will definitely come back to play because the aim of price isn't to do anything than to sweep liquidity points. And when I keep seeing liquidity points like this, it makes sense for me to say, okay, price is going to come and take all of this guy out here. so that I have the sweep of this liquidity high or liquidity low internally here, then I take price higher. That's exactly what I did with Euro USD today, just to show, just for reference. So you can see, normally I'd call, say, this an IPA level, or even as a matter of fact, the internal one works most for an IPA. This is going to be what to use. But if you notice, price didn't come towards there at all. Instead, what all it did was it swept this low, right? Using this zone as some certain kind of resistance before pushing price higher to the take profit area. So that's just one entry. That's just one entry. Another entry would be what? The mitigation. The mitigation. Now, the mitigation in what sense? After you've had an inducement, which is this guy, this is the breakout structure, and then of course you can then, let me delete this so to make it clear. So let's say this is your breakout structure. I'll write BOS inside of it. BOS, put it in the middle. Okay. So I have the BOS, and then my next point of mitigation would be where I can choose this O zone right here. And then what do I have to do? Normal thing. So this is the second way that I do my entry. This is the second way. Right now, this is the second way. The first way is what? Is I don't necessarily need to wait for price to come and mitigate me. It's still the same concept, but I don't need to price to come and mitigate me. Instead, immediately from the liquidity, I pick my entry. If I go into 1 minute, you're gonna see that clearly. So I've shown you guys two, but I'm gonna come back to it again so you can follow up closely. So my 1 minute, right? The first thing I'm worried of is the fact that what? Price has taken out liquidity, and then what did it do? It built up internal liquidity right here. Now, when I see things like this and I have an entry below, it scares me, right? Because I might take a loss. Then what happened? Price came, swept that liquidity, generated liquidity again. I'm still scared. Trust me. You could, if you see me today, you'll be like, oof, I don't wish this thing goes to SL. It's honestly, because nobody wants an SL, right? The same thing happened right here, right? But what happened at the end of the day? This low, this inducement POI held. So because it held, I could just wait it out. So because it swept this liquidity, it was beautiful for me to use this entry. Now, for anyone who entered late, of course, you could do the same thing with the next one as well. Then in this case, the liquidity will be here, this guy, right? And then your entry would be just below that. And after the inducement of that liquidity, what happened? Look at that move, that rapid move. Within how many candles? I think like 30 candles or so. 1, 2, 3, 4, 5, 6. And then you're done for today. So this is one way that I plot my entry. I don't know if it's easily understood, but this is how I do my stuff. Now, the second way that I do them is this, okay? Using the same 1 minute, this is the OB. This is my OB, okay? Now, because this is my OB, where is my order block? This here is the order block. I won't just pick the order block. Now, why? I'm going to explain why I believe all of those zones, prices wasn't going to come back to it. If you look at the back here, yes, this is a gap, right? It's the price needs to be filled. But if you look at this, you have no fair value gap. 1, 2, 3. Meaning that what? Trust me, everything here has already been so much isolated. Probably on other pairs, it's going to work, but for EU, for the most part of it, it doesn't happen. Look at it. Oh, no fair value gap, no fair value gap, no fair value gap. So there is no reason for price to come back here, at least for now. Now, let's go to the other one, just above it. Look at this. Where is the fair value gap? The fair value gap started where? Here. Right? All of this is a gap. That is why when price came, you only pinched inside that fair value gap, and then boom. So you need to look at what is coming before to identify what is going to happen after, or to, should I say forecast? I don't like using the word forecast. Look like we are betting. To make reference to what is going to happen after. So all of this gap right here built up that move that made this guy a mitigation area for price to go out. Now, most people would definitely be waiting for the extreme, which is not a problem. If it, it's not a problem, though it doesn't happen all the time, but I'm just saying why I do what I do. It's not a problem, but we need to look at the back. These gaps behind. What story are they telling? Gap is here, gap is here. Boom, mitigation. So let me look for another POI so that I could look at this as well. Mitigation, mitigation. What did price do? Price just came for this. It didn't come extremely. There's gap here, there's gap here, look at it. There was no need for price to literally what? Come lower to the extreme. There was no need for that. Let me go look for another example. So that's 3 entries after you guys. So this is one of the, you know, this is one of the cases where price is going to come to the extreme. You can see that. Any gaps around here? 1, 2. I see a gap right here. But then if you look closely, that gap has already been filled by this candle. I'll zoom in. This gap right here has been filled by this black candle. Because it has been filled, there is no reason for price to come lower. There's literally no reason for price to come lower. But in this case, what do you have? There's always a reason for everything. You have what? Your liquidity below here. And when you have your liquidity below here, really, really close to the OB, it's made sense for it to come and mitigate something to push higher. So that's just it. But in case whereby there is no liquidity to an extent, but it's trying to take another external liquidity, then it might not really mitigate this block. Look at the gap that I gave you right here. Look at where the breaker structure is. Oh, sorry. No, not that. So these are my entry modules. This is how I enter my trades. Which other way do I go into trades? I'm trying to remember. Oh, now look at this again. This is another way that I enter, right? Say this is an IPA level, right? This break of structure to the upside, liquidity build up, mitigation, and boom. The one that is leading the move right now is what? This guy. Why am I using box instead of line 75? Sorry, guys. Okay, this didn't mitigate. Clear. Why didn't it mitigate? Let's understand it. Did it sweep some kind of levels? Yes. Look at this. So it is an inducement pushed up. All right, coming here. This would later serve as a liquidity, but for now, what is it serving as? It's serving as this. Look at the gap. If there is, so we see that move to the upside, IPA level, mitigation of the IPA, break of structure, mitigation, push up, market sweeping. If you see it swept liquidity, it came back down a little bit, but that was not the aim. There is a bigger objective. Price moved closer to it, acting like something was going to make sense out of it, but it's a scam. It's a trap, called SMT trap. I drew my next IPA level right here. Price didn't come towards it or magnetize towards it, but what did you do? It swept this liquidity. Liquidity most of the time has a long wick. It's like either your armor or is a shooting star color. Yeah. So you had this inducement, build up of liquidity, internal liquidity creation, and you have what? Sell-off, inducing that liquidity. Boom. Took out liquidity. After it takes out liquidity, it came back to take out this liquidity as well because series of mitigation becomes a module for liquidity to be taken. It's just like you have series of mitigations. It's going to, at the end of the day, create a trend line liquidity for you. And you had this inducement. So all of this liquidity right here so will be taken later on. And then you have all of this mitigations. So these are my ways, these are the ways that I enter my trades, these are the strategy that I use. I just, look back and make it simple as possibly can. Should there be a reason why this is happening? Should there be a reason why this is happening? Another thing is sometimes all you just need is to see is just a pool of liquidity like this. When you see something like this, you understand, know how. I just need something to take this out and then market's gonna, when I see an OB like this, I apply this point of liquidity here, I'm definitely taking this out. Now it's small, but it's still one of those things. So something like this, I don't need breakout structure or etc. I just go in, I can stop here. Something small, concise, but you don't need it. Just make sure you follow your plan. Unless you're really, really good at it, then you can also do this. So that's gonna be all. Somebody asked in the comment section, I should show I should show my trade models, my trade entries, and here it goes. I hope this to an extent can make you understand the 3 or 4 ways that I trade. The first one is what? I wait for IPA level. Second one is breakout structure mitigation. The third way is I induce liquidity, not necessarily of the IPA or the mitigation. And the third way is the gaps that the market gives by the candle before the main mitigation is going to happen. So see you all on the next one, guys. Peace, everyone.